Chapter 11, Online Lesson number 5, Markup and Margin. What do you mean by gross profit? Gross profit is the difference between the selling price and cost of sales. Gross profit equals sales minus cost of sales. When you express the gross profit as a fraction or percentage basis, we call that as gross profit ratio. There are two types of gross profit ratios in your syllabus. Those are number 1 markup and number 2 margin. We discussed that there are two ways to calculate gross profit ratios. Look at the first one. Markup. Gross profit over cost of sales into 100%. Number 2, margin. Gross profit over sales into 100%. Look at this example. Example 1. Cost of goods sold 75 rupees and the selling price is 100 rupees. You are required to calculate the markup and margin. When you are going to calculate markup and margin, basically you need 3 items. Those 3 are sales, cost of sales and gross profit. Remember, 3 items. Again, sales, cost of sales and gross profit. Sales given in this question, that's 100. Cost of sales given, that's 75. But the gross profit has not been given. Okay, then you need to calculate the gross profit. How do we calculate gross profit? Gross profit equals sales minus cost of sales. Okay, then take 2 minutes and write down the main 3 items required. Those are sales, cost of sales and gross profit. Now look at your answer. Cost of sales 75 given, sales 100 given. Then you need to calculate the gross profit. Gross profit equals sales minus cost of sales. 100 minus 75, that's 25. Now we are going to calculate the ratios. We are going to calculate markup. The first step is to write down the ratio. Write the ratio. Gross profit over cost of sales into 100%. Now substitute figures. Gross profit, it's 25. Cost of sales 75 into 100%. 25 divided by 75 into 100%. Now calculate the final answer. That's 33.33%. Now we are going to calculate margin. First of all, write down the formula. Gross profit divided by sales into 100%. Substitute figures now. Gross profit is 25, sales 100 into 100%. 25 divided by 100 into 100%. The answer is 25%. Now we are going to do another example. Look at this example 2. I have given you some information related to Nilakna Limited and I am asking you all to calculate the closing stock. Stock as at 31st March 2020. I have given you some opening stock, purchases and sales value plus the markup. Okay, it's a totally different question. Markup also has been given to you. How you are going to answer this question? For that, you need to draft a basic trading account format. Take 2 minutes and draft the trading account basic format. Now look at my format. Statement of trading. The basic format: sales, cost of sales, under that opening stock plus purchases minus closing stock. Then the answer is cost of sales. That will be deducted from sales. Then the final answer is the gross profit. What are we going to do now? In the question, I have directly given you some figures. For example, in this question, I have given you opening stock, purchases and sales value. Okay, take 2 minutes and enter all the values given into this format. Now look at this answer. We have entered sales, opening stock and purchases. But you can see that 3 main answers are missing. That's closing stock, cost of sales and gross profit. So you can understand that we can't proceed the question through this statement of trading. We have to find another way to solve the question. There was one other information remaining. That was markup. They have given you the markup is 25%. Therefore, we are going to proceed through that information. What do you mean by this markup 25%? Markup formula is gross profit over cost of sales into 100%. Now 25%, if you present 25% as a fraction, you will be writing that as 25 over 100 into 100%. Okay, the meaning of 25% markup is if the cost of sales value is 100, gross profit will be 25. That's the meaning. Now look at the final calculation. I have given you 3 columns: cost of sales, gross profit and sales. Now you know that sales equals cost of sales plus the gross profit. You add the profit to the cost and then you decide the selling price. So under cost of sales, you are going to write down 100 because it's markup 25%. Gross profit 25, cost of sales 100. That's the assumption. So under cost of sales, you are going to write down 100%. Then the gross profit should be 25%. Then you need to decide the sales value. Sales value equals cost plus the profit. Then 100 plus 25, sales value is 125. Then the next step, cost of sales actual value you don't know. So I have put a question mark there. Gross profit actual value also we don't know. Then I have put a question mark there. And the sales actual value we know. It's given in the question. That's 120,000. So using this actual sales value, we are going to calculate the gross profit now. Now look at this calculation. We are going to calculate the gross profit. Actual sales value 120,000. The assumption sales value is 125. And the assumption for gross profit is 25. Then we are going to calculate the gross profit like this. Actual sales value 120,000 divided by the assumption sales value, that was 125, multiplied by 25. assumption gross profit value. The meaning is if 120,000 actually equals to 125 in our assumption, what we need is the actual figure connected with this assumption 25 figure. Therefore, 120,000 divided by 125 multiplied by 25. You get the gross profit as 24,000. Then what we need to do is we need to calculate the cost of sales value. Cost of sales equals sales minus gross profit. Sales 120,000, gross profit 24,000, then the cost of sales value is 96,000. Therefore, we have calculated gross profit and cost of sales through this working. Now, what you have to do is enter these two figures to your statement of trading. Now, look at this statement of trading. You have entered gross profit and cost of sales to statement of trading. And under cost of sales, you have entered opening stock and purchases. Then you can calculate the total. 5,000 plus 100,000, it's 105,000. Now carefully look at this statement of trading. You can see that the closing stock is missing. Now we are going to calculate the closing stock. How are we going to calculate the closing stock? You can see that the total of opening stock and purchases, that's 105,000. From that, when you deduct the closing stock, you will get the cost of sales as 96,000. Then it's very clear to you that the closing stock equals 105,000 minus 96,000. Now enter the closing stock amount. Now you can see that the closing stock is the difference between 105,000 and 96,000. That's minus 9,000. So the closing stock value is 9,000. This is not the answer they expect. I'm asking the closing stock value. So you have to write the closing stock value separately as the answer. Now you can see that the final answer for example 2 is 9,000. So you are writing the answer as stock as at 31st March 2020 rupees 9,000. Now we are going to do another example. Now look at this example 3. Here I have given you some information: opening stock, closing stock and sales, and the margin is given to you, and I am asking you to calculate the missing figure. Still we don't know the missing figure. So the first step is to draft the statement of trading and then enter the figures given. Okay, then take 3 minutes and draft the statement of trading and enter the figures given. Now look at your statement of trading. You have the sales value, opening stock value and the closing stock value. You don't have the cost of sales, gross profit and purchases value. 3 figures are missing. So you can't continue with this statement of trading. So you have to continue with the other figure given. What's the other figure given? That was margin. They have given margin as 50%. So you have to continue your calculations with this margin. Margin 50%. Margin equals gross profit divided by sales into 100%. 50% equals to the fraction 50 over 100. Therefore, the meaning is if the sales value is 100%, the gross profit will be 50%. Therefore, you are going to write cost of sales, gross profit and sales. Gross profit you know that's 50%, sales 100%. That's your assumption. Now you need to calculate the percentage of cost of sales. Cost of sales equals sales minus gross profit. 100% minus 50%. Therefore, the cost of sales value is 50%. That's the assumption. Now we are going to enter the actual figures. Actual cost of sales we don't know. Gross profit also we don't know. But the sales value we know. That's 150,000. Now we are going to calculate the actual gross profit and actual cost of sales. If 150,000 rupees equals to 100 in our assumption, what we need is the rupee value equals to 50 in our assumption. Therefore, we are going to write this as 150,000 divided by 100 multiplied by 50. So you are getting the gross profit as 75,000. The next step is to calculate the cost of sales. Cost of sales equals sales minus gross profit. 150,000 minus 75,000. Cost of sales value is 75,000. The next step is to enter this gross profit and cost of sales figures to the statement of trading. Now look at this statement of trading. I have entered cost of sales and the gross profit value. Cost of sales 75,000, gross profit 75,000. Now you can calculate the total of opening stock and purchases. Okay, cost of sales 75,000. That has been arrived when you deduct the closing stock from that total. Okay, so cost of sales value given and the deducted value also given. Therefore, what you have to do is you have to add those two figures. 75,000 and 32,000, you are getting the total as 107,000. Now the only missing figure is the purchases value. Okay, now you can calculate the missing figure purchases value. In this statement of trading, opening stock value is 12,000 and the total of opening stock and purchases it's 107,000. Therefore, it's very clear to you that the purchases value is the difference between 12,000 and 107,000. Then you are going to deduct 12,000 from 107,000. Then you are getting the answer as 95,000. This is not the answer we expect. You have to write it separately. You can keep the final answer like this. Purchases for the year ended 31st March 2020. It's rupees 95,000.